Yeah, amazing. And so obviously you've got your chart open here on TradingView. You're talking that you're obviously taking longer term trades. It might be good for everybody if you might just want to explain how you approach your trading.
Yeah, so it's quite simple. I didn't come up with this method. There's a few people that teach it, and I'll just draw it out for you. These are my days. So let's go to a Sunday, Monday, and these bars here are my Asia, UK, US session. Sunday, Monday will generally start with a fake move week beginning. They'll issue a fake move in one direction. During a session changeover, they'll issue an M or a W. In this case, it'll be a W. And once they do that, they'll shift away, and that it'll be a 3-day or 3-level rise. So first day, rise, retrades. Second day, rise, retrades. Third day, rise, retrades. Midweek reversal, M formation, drop 1, day 1, drop 2, day 2, drop 3, day 3, and end the week into consolidation. That's the model that I trade. Now, this is a typical week. We don't always have typical weeks. It's like in an ideal world, this is the pattern that we trade, and I only trade the 15-minute time frame to do this on. And let's just go to we'll go to USD JPY because the price action of USD JPY has been very good as far as the cycle playing out. So this was a trade that I took. Where was it? Back in.
And I suppose for your trading style, how do you then? Obviously, you're following the chart. You're mapping it as you see it making the moves that you're expecting. How do you, I suppose, make that decision then to enter the trade?
So there's a lot of you need confirmation basically. So this is a typical week on JPY. Monday opened. This is dead gap zone. Monday opened with a false move, which was this push down. And there's your W. Or you could have took this. You could have took this one. This is the one I took actually because I trade the UK session only because I'm in Australia and I'm not staying awake for the US session. Now, here it creates, this is the initial low of the day. It creates that in Asia. And it generally does create either the low of the day or the high of that day in the Asian session. Now, the rules to take a W are quite simple. Asia will consolidate. Generally, the ideal Asian range is anywhere from 30 to 50 pips, depending on the pair. At 1 a.m. New York time to 2 a.m. New York time, they'll issue an extension, which is what this move is here. This down move here. And it normally comes in 3 bursts. And what that does is it induces people to go short because maybe it validates, I don't know, fib patterns, this retracement. People want to short the retracement. And right on the UK Open candle, which is at 3:30 a.m. to 3:45, it'll be a hammer. Has to be a hammer on that candle. It can wick below the low of the day that it created in Asia, but it must close above it. That's my trigger to go long.